Welcome to this explainer. Okay, I want you to just imagine this for a second. A really powerful storm hits your neighborhood. The sky goes completely dark, the wind is howling, and in a matter of just terrifying minutes, the unthinkable happens. The roof is torn right off, windows are totally shattered, there is literally water everywhere. Now your family is safe, and wow, thank goodness for that, right? But you look around, and your home is just devastated. Surviving that storm feels like the ultimate victory. But as you stand there, kind of surveying the wreckage of what used to be your living room, it hits you that surviving was actually only the very first hurdle. Next comes the moment you're absolutely counting on. You think your insurance is going to step in and save the day. So you file a claim, you sit back, you wait for help, and instead, you get some genuinely shocking news. A huge part of the damage just isn't covered, or even worse, a massive chunk of those rebuilding costs is going to have to come straight out of your own pocket.
Okay, so let's really dive into this. A lot of homeowners naturally assume that having an insurance policy equals having absolute bulletproof protection. But insurance isn't some magic shield. It's a legal contract. And the really hard truth is this. What matters most isn't what you think is covered. It's what is actually covered in that dense fine print. So today, we are exposing 5 critical home insurance gaps that can completely transform a natural disaster into a literal financial nightmare. And hey, you're definitely going to want to stay laser-focused here, because the 5th gap, it is the absolutely most expensive surprise waiting for unsuspecting homeowners.
All right, let's look at gap number 1. It's a really dangerous mistake people make when heavy rainfall hits. The common assumption is just that flood damage is automatically included in every standard homeowner policy. You pay your premium, you feel completely safe. But the harsh reality? After severe storms or rising water events, homeowners are suddenly blindsided by these incredibly strict limitations. Standard policies, more often than not, do not cover flooding at all.
And that brings us to a frankly staggering number: 0. That is exactly how much help a lot of homeowners get for flood damage. $0. I mean, think about the financial devastation of having to completely gut and rebuild your entire flooded first floor with literally 0 insurance help. It's unimaginable for most families. So here is your very first actionable takeaway. Never, ever assume you have coverage just because you hold a policy document. You've got to verify it directly, and honestly, look into a separate flood policy if you're anywhere near a risk zone.
Well, this naturally brings us to gap 2, underinsured rebuilding costs. So many homeowners mistakenly insure their property based strictly on its market value. But I want you to think about the reality of having your home entirely rebuilt from the foundation up after a massive fire or a tornado. Rebuilding costs are just a completely different animal than market value. If you're only insured for what your house could sell for, you are going to fall drastically short when the hammers actually start swinging. And gap 2 carries some pretty severe financial consequences because of 3 compounding factors that hit all at once. Material prices rise exponentially because, well, demand spikes after a widespread disaster. Labor expenses shoot up because local contractors are suddenly incredibly scarce. Construction costs fundamentally change overnight. The solution here is absolutely critical. You have to verify your actual rebuilding coverage. It's often called extended replacement cost coverage before a disaster hits. Do it now so you aren't left holding the bag for tens of thousands of dollars in sudden construction inflation.
Okay, moving right along to gap 3. When disaster strikes, it is so incredibly common for a home to become completely uninhabitable. And the huge mistake homeowners make here is focusing entirely on the physical structure. The wood, the drywall, the roof. Meanwhile, they completely ignore the reality of their own displacement. Where are you going to sleep tonight? Where is your family going to live for the next 6 months while your house is a massive, dusty construction zone?
Displacement brings these compounding, out-of-pocket financial drains that last for a long recovery period. We're talking hotel stays, long-term rentals, eating out literally every single night because you don't have a functional kitchen anymore, not to mention additional transportation costs because your temporary rental is suddenly way further from your work or the kid's school. The solution? You've got to ensure your policy includes comprehensive loss-of-use coverage. Otherwise, these basic daily living expenses are going to drain your savings dry before your foundation is even poured. Let's transition into gap 4, deductibles. Now, by definition, a deductible is a substantial portion of the costs you must cover before your insurance contributes a dime. Think of it kind of like this massive mechanical vault connected directly to your bank account. The heavy gears start turning and your hard-earned cash is just drained out, dollar by dollar, to feed this deductible machine. It completely empties your personal reserves before the insurance company finally steps up to help. That's the mechanical reality of how a deductible actually works against your savings.
And the fatal flaw here? It's chasing those low monthly premiums while completely ignoring the high deductibles attached to them. Look, it feels great to save $50 a month, right? But if a disaster strikes and you suddenly discover you have a $10,000 deductible that you have to pay up front, yeah, that low premium was just an illusion of savings. Your solution is pretty straightforward. You absolutely need to understand your deductible obligations, and you need to keep that exact amount safely tucked away in an emergency fund prior to ever filing a claim.
Section 1. The Ultimate Trap. Gap number 5.
All right, this is the one practically nobody reads until it is far, far too late. The crucial point here is understanding policy exclusions. This is the hidden fine print that dictates exactly what is not covered. It's best to think of this as a hidden trap door in your contract. You think you're walking on solid ground, right? But an exclusion flips a switch, the floor drops completely out from beneath you, and your claim is denied. Homeowners rarely review these exclusions until after they've filed a claim. And unfortunately, that is exactly when the most painful surprises happen. Let's see how this actually plays out in real life. Take a homeowner named Sarah. Day 1, a severe storm completely damages her roof and water pours into her home. Day 3, she assumes insurance is going to handle the whole shebang, so she confidently files her claim. But watch what happens next. Fast forward to day 14. She gets hit with endless documentation requests, hefty deductible requirements, and policy restrictions that are suddenly revealed to her. By day 30, her financial stress reaches an absolute peak as these huge gaps in her coverage threaten to swallow her entire recovery fund.
The reality of Sarah's emotional plight is perfectly summarized by this really simple truth. The most expensive insurance mistake isn't lacking insurance, it's misunderstanding insurance. The financial stress and just the sheer emotional toll of this misunderstanding are almost as devastating for Sarah as the storm itself. It's truly a second disaster, just entirely of the financial variety.
But listen, you do not have to be Sarah. Let's pivot to the solution, because you have the power to protect yourself right now. Here is your homeowner's master plan. Step 1, review your policies annually. Do not just set it and forget it. Step 2, understand those exclusions. Find the trapdoors before you fall through them. Step 3, verify that your rebuilding coverage actually matches today's construction costs. And Step 4, understand your deductibles inside and out, so you know exactly what your out-of-pocket obligations will be from day 1.
And let's round it out with the final 3 steps of your master plan. Step 5, document your property pre-disaster. Get your phone out, take photos, make a walkthrough video. Build your evidence right now while it's sunny. Step 6, ask your agent the really hard questions before you ever need to file a claim. Put them on the spot. And Step 7, never assume coverage exists. Read and verify. Because I promise you the absolute fastest recovery belongs to those who prepare their evidence and verify their coverage long before the storm clouds ever gather.
Because look, at the end of the day, natural disasters are totally unpredictable wildcards. But financial surprises, those don't have to be. After your life has been turned upside down by a storm or a fire, the absolute most chilling, expensive words a homeowner can ever hear are these: "Sorry, that's not covered." Insurance isn't just about keeping a piece of paper in a drawer. It's about knowing exactly what is inside it. So, I'm going to leave you with this somewhat provocative question. Have you ever actually read your entire insurance policy from start to finish? Like, really read it? Yes? No? Or maybe only after you had to file a claim? Let me know. Hey, if this explainer opened your eyes today and helped you understand some of those hidden risks, make sure to subscribe to NexClaim. We are totally dedicated to bringing you more of these essential explainers on home insurance, navigating tricky claims, taxes, banking, and wealth protection. Prepare today so you are never caught by surprise tomorrow. Thanks so much for joining us.